Let's take a look now at the regional economic scenario here in the MENA region, and a man who has researched it as well as anybody in the region, in fact, to the extent that Redwan Ahmed was ranked #1 shipping analyst in 2010 and 2011 in the Euromoney research polls. In the maritime space, he's written research on DP World, on Bahri, on Milaha, Gulf navigation, Nakilat, and so on and so forth. He is a transport and shipping sector analyst specialist in this region for EFG Hermes, the region's largest independent investment bank. So for an economic scenario of this region, let's welcome Redwan Ahmed.
Thank you very much, Jeremy. Good afternoon, everyone. As Jeremy mentioned, I'm an equity analyst at EFG Hermes, and the sector I specialize is in shipping, maritime, etc. Now, I just wanted to give you a brief overview in terms of how we speak to investors and the difficulty investors have in investing in the region, into the sector, etc. The dilemmas that we have, really. So the first thing I have to do is advise investors on what to buy and what to sell. Now, the first hurdle that we have to overcome is investing in the MENA region a good idea or not? And just from a macro perspective, this is the kind of chart that we start to show people. I don't know how clear that is. If you look on the second column, you'll see real GDP growth by country. And the good news there is they're all positive, so that's a tick in the box. If you look at Qatar and Saudi, they're growing at 5% above, which compares very favorably to Western economies, which are either flat or sometimes negative growth. So that's a huge positive. On the far right-hand side, you see current account balance as a percentage of GDP. Again, most of them are positive, which implies that there should be significant investment going into these economies over the medium term. So when investors look at our region here in MENA, I think it's fair to say that Egypt and Saudi would be the key areas where they are likely to invest or want to invest. And that's mostly because of the kind of demographics. There's a larger population, young population, so hence why they're a lot more optimistic about those two economies. And obviously, same goes for Qatar and UAE, but on a different scale, really. So once you've convinced the investor that it's a good idea to invest in MENA, my job is to next advise them on the shipping sector. And this is where it becomes a lot more difficult. So I've got a few key indicators here in terms of performance of the shipping sector. The first one on the top right-hand side is the Russell 2000 shipping index. And it's a broad-based measure of how the Western shipping companies have performed in 2012. As you can see, it's not a pretty picture. The index is down 22% year to date. It's down 12% in the last 6 months. So as you all know better than I do, there's been problems with overcapacity. Some of the companies have gone bankrupt. So generally, it's been another difficult year. So I think this is the third year now where the shipping index as a whole has underperformed. And that obviously causes a problem for investors. They've been losing money in this sector now on a broad base over the last 3 years. When stock prices go up or down, investors can position themselves to either make money or lose money. So there's opportunities to buy and sell. But one thing they really hate is earnings volatility. And if you look at the VLCC sector, the chart at the bottom right, it shows the earnings within the VLCC at day rate. And that's really difficult sometimes to, as an investor or as an analyst, to kind of fathom in terms of what is going on there. So if you look at that chart, a VLCC in the beginning of January 2011 would earn you $20,000 a day. 2 weeks later, it would earn you $40,000 a day. 3 months later, it was earning $5,000 a day. Just to give you an idea, in the first half of 2012, if I was a VLCC owner, I'd be expected to make around $30,000 a day. In the second half, that fell to below $10,000 a day, but in the last 2 weeks, it's gone up to $30,000 a day again. So it's so volatile. So you don't know how the company's going to perform. You don't know how the stocks are going to perform. You've got a sector which has been underperforming for 3 years, and you've got earnings volatility in that sector as well. So unfortunately, as an investor, it's a big no-no on a kind of macro perspective. So you like the MENA region, but the shipping sector has been difficult, and you try to potentially avoid it. Then you look at the companies in the MENA region. So we've talked about Bahri, there's Milaha, we have Gulf Navigation, Nakilat, DP World. It's a broad range. You've got from container shipping to kind of more of the kind of pure tanker operators. And Milaha is a bit more of a conglomerate. In terms of size, we go for all the way from 10 billion, which is DP World, to just over 100 million, which is Gulf Navigation. Revenues as well are very sizable. DP World almost generates about 3 billion of revenues, and you start from Gulf Navigation about 50 million in revenues. Now, on the right-hand side is what makes it very interesting, actually. Despite all the difficulties within the sector, Bahri stock price performance has been up. It's up 42% this year, which is phenomenal, really. Gulf Navigation up 29%, and DP World has been up 21%. Sorry, Gulf Navigation up 29%, and DP World up 21%. The other two are down 12% and 13%. So when you look at the performance of the stocks this year, as an investor, you've lost out by not investing in the MENA maritime sector. And I have investors calling me all the time. They're scratching their heads. They're like, how did we miss this performance in Bahri? What happened there? The industry fundamentals are negative, but the performance has been very, very positive. I think it goes back to the fact that actually, despite all the difficulties, the companies here in the region have some competitive advantages. And even despite the kind of the problems and the hurdles they face, they can perform well. And I think that's the kind of key message to point out here, actually, that if you've not invested in Bahri this year or DP World, then your fund isn't performing very well. And I think that's the key message, but the difficulties are still there. In terms of the outlook for 2013 and 14, I think it'll be more of the same. The real problem with the maritime sector, and again, you guys are in the industry and you know better than I do, it's the kind of overcapacity problem, particularly in the tanker and the dry bulk sector. So the table at the bottom right-hand side shows you, it's a study from Clarkson's. It shows you the demand for tanker in terms of oil demand. And that's expected to grow 3% in 2012, which is not bad. But the issue really is at the bottom. The fleet is growing at 6%. So you've got demand growing at 3% and supply growing at 6%. And unfortunately, that issue is expected to continue into 2013. So until the industry comes to some sort of agreement where they actually manage to control the supply, which I think they will do, I think we'll continue to see this volatility. So I think in 2013, more of the same, more volatility, but what I'm hoping for is that there is a bit more stability than we have seen in the last 3 years. And we do have some great companies in the region. I think Bahri will get better. We've talked about DP World in terms of the expansion of Jebel Ali generally is doing very well. I think performance at Milaha also will continue to improve. So I think we have some great companies here, and despite the difficulties, I think over the years, I think we'll see more and more investors investing in the region, and hopefully there are some better times to come in the near future. That's it for me. Thank you very much.